Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. Nvidia boosts markets with a bullish revenue forecast that beats expectations. We'll hear from Bloomberg's exclusive interview with the CEO of the world's most valuable company. Hopes fade for a Fed rate cut as the October jobs report is scrapped, leaving policymakers without a key data point ahead of next month's meeting. Plus, US military officials head to Kyiv to help revive peace talks as EU foreign ministers discuss further sanctions on Russia.
In the meantime, a quick check on these markets. Green on the screen across the board. Those Nvidia results powering both sides of the Atlantic. Euro Stoxx 50 futures higher by 1% off their highs today, but still not too shabby. The real outperformer this morning is the Nasdaq 100. Those futures almost higher by 2%. We've got a lot coming out from the Federal Reserve as well. We're going to be digesting that. 4.14 on the 10-year yield as we start to see some of the hawks gain a little bit more momentum. And one eye on Japanese assets. There might be a rate hike coming from the BOJ. There's a lot of concerns about the sell Japan trade. 157.74 on that currency pair. The countdown to the opening trade starts right now.
Sales are off the charts for Blackwell, and Nvidia GPUs in the cloud are sold out.
What a great set of numbers. You can't argue with the figures. The gross margin was epic. Nvidia blasted past expectations last night. It is sold out as far as the eye can see pretty much. And you have to argue, therefore, maybe if you were worried about overspend before, you could be even more worried about it now. But it was a strong set of numbers. The other thing you have to remember here is that Nvidia's not actually at year highs. We're going to bounce this morning, but we're still well off those highs. And it's interesting that the Nasdaq also is well off those highs.
Yeah, absolutely. The stock was up after hours, so we will get that bounce today. Nasdaq Futures suggesting we will, go higher at the start of trade. And let's focus on the numbers and the strength of the numbers, because it doesn't answer all our questions about bubbles and the whole tech sector and hyperscalers.
He said what bubble?
He said what
no
bubble. But let's focus on the business itself. $4.5 trillion in market cap now. A sales number for this quarter that they are forecasting that would be 10 times the number for the same quarter just 3 years ago. Tenfold increase in the size of this business at the top line in just 3 years. And if you look at the bottom line, the full year profits that they're now forecasting, they're expecting those they're expecting those profits to come in higher than the sales numbers, if you can get your head around that, at Intel or at AMD. Such is the size and the scale and the scope of this business, and firing on all cylinders, as we heard from Jensen Huang.
And this is just the demand. There's still supply issues, and there's still a backlog issue whether or not they can actually deliver on some of those promises. We know there's already delays back into the system with Blackwell, with Rubin as well, of already looking at 1 to 2 years. The line that actually I thought was interesting was, as we're talking about the circularity of some of the tech stocks here and some of these tech investments, is that Nvidia, and I want to say the last 7 days or so, had announced this investment into OpenAI, but had also announced investment into Anthropic. Yeah. And Jensen Huang had addressed those investments. He said OpenAI is a no-brainer, moneymaker, we're going to get revenue. Anthropic, he said, we're doing this to actually create a relationship with a company that doesn't use our technology at all. And I thought that was an interesting way for him to kind of assert himself or assert NVIDIA's technology in a rival. Yeah.
But it's all getting a bit circular, isn't it? Did anybody really think that the bubble was going to burst because of a set of Nvidia numbers? No chance. They're down here. The hyperscalers are up here. This is about, so you're Nvidia and I buy a chip off you. That's great. You're going to do fantastically. Am I going to make money off that chip? I think is the question that still remains to be answered. And Oracle is going to report on the 9th. And I just wonder whether Oracle could be a bigger event than Nvidia.
And if you're worrying about if Kriti is Nvidia in this situation, if you're worried if you're worried about how fast these chips depreciate, then that plays badly for you, Guy. But it might play out pretty well for Kriti if they depreciate a bit faster than expected and they get to sell more.
The cadence on them releasing new chips is getting higher and higher and higher.
Kriti's having a great time, as is Nvidia. But I will say, though, in the last 2 sessions and in the lead up to these earnings, the markets were selling off in a very big way. So I almost wonder if that's amplifying some of the rebound that we're seeing in the broader markets. We had a massive sell-off on Monday, a massive sell-off on Tuesday. We were basically flat in yesterday's session. So, yes, there's good news, but we were kind of due for a bounce.
And lots of people told us it wasn't about the Fed. They said it was about AI valuations.
It's definitely about the Fed. Who was it here the other day? Patrick Armstrong. We came to the end of the conversation with Patrick Armstrong the other day, and I'm like, is it about the Fed? He's like, of course it's about the Fed. And everything is about the Fed cut in December. The Fed cut in December is now priced at 1 in 4. Okay? the market is basically discounting the Fed. So there's no market pressure coming from the Fed to cut in December. Is the Fed really going to cut in December? And you look at the minutes last night, and they basically tell you that many of the members of the FOMC are not on board with a cut in December. So do we exclude the possibility of a cut in December? I think that is now basically the base case. But the question then is, do you put your hands over your ears and say this doesn't matter because basically we're about to get a new Fed chair, and President Trump, judging by what he said last night in the White House, thinks that that next Fed chair should be cutting rates aggressively. In fact, he's a little concerned that Scott Bessent isn't able to deliver that right now. Take a listen.
I'd love to fire his ass. He should be fired. Guy's grossly incompetent, and he should be sued for spending $4 billion to build a little building. You got to work on him, Scott. The only thing Scott's blowing it on is the Fed. Because the Fed, the rates are too high, Scott. And if you don't get it fixed fast, I'm going to fire your ass, okay?
That's back on the table then, the political pressure to get the Fed to cut rates. But here's the thing. When do we get that? Because that's potentially a next year story. There's funding pressure right now in the market. What do I do if I'm the market? Can I wait for the next Fed chair to cut rates aggressively? Because all of these multiples, back to Nvidia, all of these multiples rely on the Fed cutting rates.
Yeah.
And if we have to wait till May, that's a problem. And if the Fed doesn't cut until May, then the funding pressure that's in the market at the moment definitely is going to become a problem into year end.
You need the Federal Reserve to keep greasing those wheels for this market, and we've seen that time and time again. That being said, I think what's really interesting about the sound that we just played, let's put the Fed minutes on the side for a second. Scott Bessent is supposed to be the voice of reason, right? He's the liaison in theory from Wall Street to Washington. We should say, of course, he did say that Donald Trump did make that threat in jest, but this is the one sticking point that Scott Bessent has time and time again said, don't fire Powell. Don't put pressure on the Fed.
Yes.
The markets will freak out.
And it has been that case, that sort of good cop, bad cop in the market's eyes around that Fed question, around the Powell question about whether he gets fired. I mean, President Trump's not doing any favours to his own jobless statistics if he's going to go around firing everybody on his administration.
But also, the other question here is, Trump's got an inflation problem.
Yeah.
He's got a massive inflation problem. He desperately wants to put money into people's pockets right now. He wants to grease the wheels of the US economy into the midterms next year. Isn't there a danger that if you send out checks and cut rates aggressively, you end up with a bigger inflation problem, not a smaller inflation problem, which clearly is going to be an issue going into the midterms?
Yeah, it's fascinating. With all that, we haven't even talked about that the October jobs report is canceled.
Yes, 8:30.
Caroline Leavitt, the press secretary that warned us about this, I want to say a week or two ago, everyone's kind of go. It's just the White House press secretary. Turns out she was right all along.
And the next Fed decision, just if you're losing track of the dates, is the 10th of December. And we don't get the November report, which will include some of the October numbers until the 16th.
But we do get some numbers today.
Yes.
8:30 this morning, ET, we're going to get the September number.
Yeah.
Let's say that comes in at 50K. That doesn't change anything for the Fed and certainly doesn't push them towards a rate cut.
There's lots to digest when it comes to the market's perspective. We're going to get a few more analysis. We should flag one more story that's on our radar, this emanating out of Washington. A peace plan between the United States and Russia on Ukraine. This one's really interesting here. We know Vladimir Zelensky has been on a little bit of a European tour. He was in London, he was in Paris, he was in Turkey yesterday as well. In the meantime, you've had U.S. Army officials go to Kyiv to talk about potential negotiations, a 28-point peace plan coming from Donald Trump's administration, talking about land secessions, talking about limiting some sort of Ukrainian and peacekeeping military troops. A lot of questions here about whether or not this peace plan would even go through. From a market perspective, though, is this something we care about? Yeah, it's really interesting that you can criticise it and suggest it's full of a lot of Russian talking points and therefore would it ever get Ukrainian support? But is Ukraine going to have a free choice to make here, I suppose, is the question the market is asking, because the market did react to this. In yesterday's session, we saw some of the defence names down quite strongly, some of them down by more than 5% here in Europe. And we also saw oil prices down on the back of this. And that had to do with stockpiles, but also this report.
So actually, I was more interested in the gas prices. So nat gas prices dropped on the back of this, which is why chemical stocks in Europe went up yesterday, because this is the big feedstock that goes into, obviously, those chemicals companies, which are really under pressure at the moment and have been under pressure all year. Gas prices come down. European chemicals makers do better. BASF was up quite strongly yesterday. Defence stocks were down. So the trade yesterday was out of defence into chemicals. And that all circles around what happens with Ukraine and basically energy costs in Europe. Or feeds. It's not even energy costs. It's like these guys take nat gas, crack it, and turn it into plastics and everything else.
So we'll see if the US military delegation has any luck in Ukraine in those conversations and those talks. And of course, we're monitoring all that's happening with European leaders arriving, European foreign ministers arriving, for meetings in Brussels around this today.
Yeah, you slightly wonder what impact they're going to have. Anyway, I'll park that thought for just a moment. Vincent Mortier is going to be joining us very shortly. He's the Amundi CIO. Sonia Martin, DZ Bank, Head of FX and Monetary Policy Research, joining us as well. Laura Cooper is going to be joining us in the second hour. Nuveen, Head of Macro Credit and Global Investment Strategist. And get this, Carson Block's going to be joining us. Muddy Waters founders. How easy is it to short this market right now?
Read my mind. We'll see. Maybe it is easy. Maybe he's waiting for that moment where the timing is certainly crucial. There's a couple of other things to put in your agenda. The EU-South Africa Leader Summit is, of course, taking place in Johannesburg. But to me, I'm a Walmart girl. Before the bell, if you're worried about consumers, if you're worried about supply, if you're worried about the tariff impact, this is the last earnings report that Walmart is going to give before the holiday season. So if you're worried about empty shelves or some sort of price read-through, we're going to hear about it today.
And these guys trade on massive multiples as well.
They do.
It's
a retailer turned e-commerce, turned
weird.
Supply, turned lots of fun stuff. A K-shaped recovery in there as well. Lots of data to keep an eye on. We have the delayed September NFP report, 1:30 p.m. UK time, alongside jobless claims, and of course our favorite Fed speak throughout the day. Barr, Goolsbee, Cook, Myron, lots of people.
Everyone.
Not quite everyone, but plenty to listen to. What else do you need to know? What is it? Thursday morning, Bloomberg has learned that China is considering new measures to turn around its struggling property market amid rising concerns that the weakening sector will threaten to destabilize its financial system. Policymakers are said to be discussing options including providing new home buyer mortgage subsidies for the first time. And that would be nationwide. A gauge of Chinese developer stocks reversed losses to rise as much as 3.3% following this news. Bloomberg also understands, this is a really interesting story, that a portfolio of private credit loans managed by BlackRock performed so poorly that the manager waives some of the management fees. That is, it has to be said, a rarity in the credit world. The asset manager funded the loans by selling bonds known as collateralized loan obligations. I think CLOs. Everybody knows them as CLOs, which means the portfolio has to perform well enough to regularly pass a series of tests. In October, the portfolio value declined enough to breach one of those tests. And this is a shocker. UK consumer confidence tumbled in November as the government hints about higher income taxes in this month's budget cause people to worry about their personal finances. According to the British Retail Consortium, the BRC, almost 60% of Britons expected the economy to worsen over the next 3 months, while only around 1 in 7 expects a pickup. The BRC Net Confidence score is now minus 44, the worst since April, Anna.
OK, coming up on the programme, BNP Paribas raises its CET1 ratio while announcing newly authorised buybacks. We will check in on the stock at the open. Plus, we'll also check in with Francine Lacroix. She's been speaking to global business leaders at Bloomberg's flagship New Economy Forum over in Singapore. Up next, a lot of conversation about AI and big tech over in Singapore, and Nvidia eases those AI fears for now. We will get a sense of how long that's going to last. We'll talk markets. That's next. If you have any questions, if you want to get involved in any of these conversations, IB plus BBTV Go is the function on the Bloomberg terminal. This is Bloomberg.
We're thoughtful, along with OpenAI, thoughtful in aligning on and taking into consideration visibility of demand and their financing capabilities. All of that has to be in accordance, has to be aligned, has to be coherent before we start to build out. And so I think the ambition's large, but the execution is disciplined. And that's really, really important to recognize. We're very disciplined with our investment. We're disciplined with our build out. These are very large scale investments.
Jensen Huang talking to Ludlow, Ed Ludlow, Bloomberg's Ed Ludlow. Important interview that's worth paying attention to. You're going to hear a lot more from it throughout the show. What do we make of the numbers? Does it change anything? Let's find out. Amundi CIO is Vincent Mortier. He joins us now from Paris. Vincent, good morning. Did what we heard from Nvidia last night change anything for you? Does it change the trajectory? Does it make you sleep better at night? The fact that Jensen Huang tells us there's no AI bubble.
Yeah, in fact, the results were pretty good. The guidance, more importantly, but you know, it's a kind of, it was expected, it's short-term development, it was very well expected in a way. But now the question mark is more long term. I think the business case is still into question in terms of overcapacities into the industry, the way to monetize all these investments, some technological gaps that could happen later in a couple of years. So if you buy today these kind of stocks, you need really to be confident that you will have a significant profit growth for the very long term. And here it is where we are a little bit less confident. So it's a relief short term for sure. Is there a bubble? Yeah. I mean, I think it's fair to say that there are some over-investments here or there. So the jury is still out. I won't be that confident to say there is no bubble at all.
Here and there, just a few over-investments here and there. I'm waiting for Oracle on the 9th. I think that's going to be a really key set of numbers to look into. You could argue, and I'd be interested to get your sort of thoughts on this. The bubble was never going to get burst by Nvidia, was it? That's not where we should be looking. How useful, therefore, is Nvidia in numbers and guidance in terms of telling us kind of where are we in the pumping up of this bubble process?
Yeah. So in fact, Nvidia is at the very heart of where the value is created today in AI. So as they've got a very dominant market share, super high margins, and lots of demand, they are really at the sweet spot. Now the question mark is, will people buying these chips will be able first to pay for them, because it's not always obvious. Secondly, to monetize these investments, and what will be the next generations of chips coming. And I'm sure you have seen the 5-year strategic plan for China. The first topic on the agenda is to make a breakthrough into the chips. And so we should not underestimate the competition that will come. Nvidia is a great company, so they will probably continue to innovate and to lead, but it will be tougher and tougher. And as a result, you can expect margins to be more under pressure. And as well, all these capacities which are built through data centers, maybe they will become more obsolete with new technologies. So I'm afraid there are maybe a little bit too much optimism which is built today in that sector. And again, Nvidia is a great company. It's not the point to say it's a bad company, but maybe it's too much hype around.
Maybe too much hype. Vincent, good morning to you. Can I ask you about how you're addressing risks then associated with the tech sector? What level of protection, defensiveness are you adding to portfolios at this point or not?
That's a key question, because, you know, if you believe we are in a kind of bubbly environment or excessive, in particular on the tech, the problem is the timing of it. So if you are right too early to call for a market sell down, you will underperform a lot. So we are convinced there are some excesses, but the timing is so difficult that the good way to proceed probably is to buy some long-dated protections, for example, on the Nasdaq. So like put options, 1 year, where like this you will be protected whatever happens during the 1 year. So you spend some money to be protected, but at least you are not suffering from the timing, because again, and you remember in the past episodes of excesses, the timing was very difficult to figure out. In 1999, 2000, in 2006, 2008, to call the top of the market or bottom of the market is always impossible. So in that context, instead of just selling stocks outright, it's better, I suspect, to have some protection over the period and to spend some money on it.
Vincent, how do you look at European equity assets specifically at this point? Do they feel like a sideshow when we talk about AI and tech, or do they look like an undervalued opportunity that could benefit if people are rethinking levels of exposure to tech?
So there are for sure less exposure to tech in the European shares. That was a drag for the markets. It may become an asset in the future if tech sector is correcting. As well, something the market is starting to realize that there are many names in European stocks that will benefit from AI in terms of adoption or in terms of supply. So it's not core AI, meaning we don't have the equivalent of all the mega cap in US, but we have many companies that can use AI to have better efficiency, better earnings, or to provide data centers with some key components like electrical supplies.
So there's a lot going on here. And trying to get it, timing's right. Timing's really important. My question here is, what I don't understand at this point is, if tech goes down, do industrials go up? People are talking about the diversified trade. Or does everything go down?
Yeah.
And then you fold the Fed into that as well. If you look at current multiples, how much are they based on the fact that there is this assumption that the Fed is going to cut and cut aggressively? And if that doesn't happen as well, kind of does the whole market roll over as one?
Yeah. Well, I mean, you've led me nicely, and I think to one of the key questions of this week. Vincent, I'm going to bring you back into the conversation here. How much, as we're exploring some of these funding pressures coming from the Fed and these repo spikes that we're seeing in the rates, how much of the green on the screen, this bubble-like behavior, is mostly because there's still excess liquidity in the system and the Fed is still greasing the wheels? How much of the Fed is helping the Nvidia and tech rally?
Yeah, you're right to mention that. There is no question that liquidity is super ample in the financial world, even though the balance sheet of the Fed has been normalized. But in parallel, when you look at money supply, in fact, it has continued to increase significantly. So there is this disconnect between the balance sheet of the central banks and the money supply. And so there are ample liquidity, ample credit available still. Many people are happy to lend money to many players. So, I mean, we don't have any issue today of credit availability. So that is also fueling some investments, some leveraged plays. So far, it's fair to say that the system is well fed in terms of liquidity. Now the question mark will be what next for the Fed, and the market is expecting for some accommodation coming probably, which will be a support. But at the end of the day, what also really matters will be the earnings dynamics, and this is what will determine what will be next for the markets. And
well, Vincent, let me challenge you there, because you're talking about the Fed support being the next potential tailwind for this equity market. In the Fed minutes yesterday, we actually saw that a lot of the members are starting to be more hawkish. They're worried and shedding doubt on having a cut come December. If we see more of that manifest in the next couple of weeks, is that what pops the rally? 30 seconds.
No, you're right. I was more talking about next year, actually, not this year. Because, you're right, the Fed minutes were in a way hawkish. But it is a current Fed, so meaning current FOMC, current leadership of the Fed. And we could expect next year, with the replacement of Jay Powell and some renewal at the board, we could expect a different lineup, a different philosophy, maybe less independence, which will be, for me, quite an issue. But it could be a positive for the market short term. But you're right to mention it will be more for next year, not for this year.
Little sugar rush on the way. Vincent, great stuff. Thank you very much indeed. Vincent Mortier joining us from Amundi, where he's the CIO. Hey, look, keep an eye on dollar yen this morning. We're trading 157.65. Sonia Martin's going to be joining us very shortly to talk about that. This is Bloomberg. Basically half an hour to go until the start of trading here in Europe. Cash equity trading. Futures looking a little like this. Unsurprisingly, given what we've just seen from Nvidia, they are reasonably positive. Widen the lens a little bit and take a look at the week, and maybe you get a slightly different picture, maybe slightly less rosy. It's worth doing this morning, I think.
Yes, absolutely. Let's have a look at where we are on that's the equity story, and that's Nvidia all over the equity story. Let's have a look at the bond market story right now. And there was a little bit of movement perhaps around Fed expectations here, but not a huge amount of action translating into the European session. We're quite distracted this morning by what's happening over in Japan, because there we do see yields going higher. We'll talk about this in just a moment. But for example, up by 6 basis points at the 10-year horizon, more than that at the 7-year horizon. So lots to think about when it comes to global bond markets right now.
Yeah, yield driving the currency space. We're seeing that in the yen, we're seeing that in the dollar, we're seeing that in the euro. There's lots going on. But I think we have to talk about the main story of this morning. This is this global equity rally, jumping, of course, on the back of those Nvidia earnings. Let's put into some context. Bloomberg's Valerie Teitel is here with more. Val.
Look, an impressive run for the Nasdaq Futures this morning, up 1.9%. Don't try to dash that guy. But yes, if we do look at a 4-day streak, so if you look at how the Nasdaq Futures have been behaving just week to date, we are just barely in the green after that strong jump, up by 0.4%. But Guy, it has been 2 back-to-back weeks of losses for the Nasdaq. So this could maybe flip sentiment into a more positive stance if we end the week on a positive note, but still a long way to go between then and now. However, it's all about those Nvidia results, have you guys been mentioning. Maybe something to put this rally into doubt is, yes, Jensen Huang was telling us about how the demand for Blackwell sales is off the charts. Cloud GPUs are sold out. But again, the bubble fears aren't necessarily about demand for these chips. It's about the return on investment, and that is still a big question to be determined by investors.
Meanwhile, in the United States, Valerie, the Bureau of Labor Statistics, the BLS, it's cancelled its October jobs report. Now, that means that the Fed is going to have less information than we thought it might come its December meeting.
That's right. The data fog for the Fed is going to continue. The lack of that October jobs report really adding to that. Anna, it's the first time in the BLS's history that they have entirely canceled a jobs report. So we are in unprecedented times when it comes to these data releases. But it wasn't just the October jobs report that was important for Fed pricing. It was the fact that they moved the November jobs report to after the Fed's decision in December. So we are in this data fog throughout this December meeting. Hopefully by the January meeting, at the end of January, we get some kind of clarity. But there are still unknowns on the calendar. Still unknown what they do to October CPI that largely went uncollected, and still unknown when they plan to release the November CPI print. That was supposed to come the day of the Fed's decision on December 10th next month. So this data backlog is really throwing that December cut into doubt. We're pricing now around 25%, so 1 in 4 odds. Not helping was a more hawkish set of minutes from the Federal Reserve, where many were pushing against a December cut even back in October. Several didn't even support that October rate cut. We saw that in the votes against the panel deciding to do so. And again, there was a wide range of dispersion, even to how they're viewing current policy, whether it's restrictive or not. So I think this is giving us some decent hints that we could see a decent amount of dissents, maybe even up to 5 in this December meeting, regardless on which way the Fed goes.
Valerie, thank you. Bloomberg's Valerie Teitel, of course, with a rundown of the stocks move that we're seeing globally on the back of big tech and Nvidia, and indeed some of the impact of those Fed minutes. Joining us now to put those things together and to think about the wider FX landscape, Head of FX and Monetary Policy Research at DZ Bank, Sonia Martin, is with us. Thank you very much for joining us, Sonia. I want to start with a nice choice of outfit, by the way. I want to start with the Fed, with the dollar, if I could. I read that the dollar is at a 6-month high, higher than its 200-day moving average. For a lot of this year, we talked about dollar weakness around the political concerns about intervention at the Fed by the White House, for example, and how that and other matters might weigh on the dollar. Is that all over? Are we done with thinking about that dollar negative story?
No, I absolutely do not believe that story is over. It might be over for now. I think the market, and I said this before, has treated this shutdown as a no news is good news situation. The lack of data that you just mentioned, the fact that we are not going to get a lot of the really important data points until for December after the Fed meeting, all of that creates a data vacuum, which I think has been filled by some optimism regarding the development of the U.S. economy. And while I can get on board with the idea that maybe the U.S. economy isn't doing as poorly as people had expected it to do, I don't think that all is well either. I mean, there is decided weakness in the labor market. We know this from the last data. We know this from some of the private data that's been published. You know, there are issues. There is inflation. There's weak consumer sentiment. None of this is going to remain without consequences for growth. So I think that dollar negative story will come back. Absolutely.
Okay. So the weak dollar story comes back, Sonia, and you think it's to do with weakness in the US economy. What if productivity, though, gets a boost from AI? What if the AI story delivers more quickly in the United States, relatively earlier adopters of technology than elsewhere? Is that a dollar positive? I've heard other houses making that argument.
Well, I think what we can definitely state is that the AI investment boom has left a big mark on US growth. And I think it's one of the reasons why GDP has been stronger this year than maybe some had feared. And it's obviously that this is going to continue into the coming years as well. So this is going to provide a boost to growth. As far as the productivity is concerned, I think it really is too early to tell. I mean, we're living basically through another industrial revolution right now. So I think it's really difficult to judge how that's going to impact. But I think it's the investment boom right now that's having the biggest impact. But that doesn't negate other factors that are placing a drag on the economy.
Sonia, just connect the dots for us from an asset class perspective. If we're talking about a weaker dollar and Fed officials, at least according to the latest Fed minutes, are turning more hawkish, does that just mean a further breakdown in the bond FX correlations?
Well, I mean, the fact that the Fed has become relatively hawkish, yes, has come as I think is a big surprise to the market. Just in September, people were expecting 125 basis points of rate cuts by the middle of next year. That's been significantly reduced. But I think it's your last guest mentioning, we have to keep in mind that the Fed next year might be quite a different Fed from the Fed this year. The pressure on the White House to cut rates will still be on, and maybe in a new constellation will have more effect. So I think, there's still quite a few rate cuts in the pipeline for the Fed. That the Fed is now holding its ground and waiting. Obviously, I can understand, given the data vacuum, it makes sense for them to maybe just keep a steady hand and wait and see.
What does cutting rates actually do, though? Does it exacerbate inflation, or do we watch it or look at it as kind of an insurance rate cut? What camp do we put that in?
Well, I mean, the inflation in the U.S. hasn't risen as quickly as people had thought it would. And the expectation was before that, the higher tariffs would basically feed through consumption or consumer prices right away, and that hasn't happened. And I think it's been discussed at length of why that's not the case. And there's a number of factors that have played into this. None of these are going to last. I mean, companies will not be able to swallow these tariffs forever, and exporters to the U.S. will not be giving price cuts on their products forever either. So that inflation is coming, and it will feed through consumer prices. Cutting rates, you can still cut rates despite this, though, because as the Fed has previously stated, these are effects that are going to be temporary. And the Fed is, I think, able to look through that inflation bout and focus more on the labor market, which is obviously showing decided signs of weakness.
Sonia, where are you going to sell dollar yen?
Yeah, I think right about now might be a good time to start, to be honest. I think we have pushed very aggressively here, on the back of, for one, I think, the recent bout of dollar strength. We have seen some yen weakness driven, I think, by the view that the new government in Japan might favor a weaker yen policy. But that's going to run into obstacles, isn't it? I mean, the BOJ has already been making noises about when it might hike rates next, because for the BOJ, the weakness of the yen does result in imported inflation, and inflation in Japan is already above target. It has been above target for a while now. So while they do want inflation in Japan, they need to keep control of it so that the possibility of rate hikes does rise. And of course, I think Donald Trump is probably not going to be too happy about dollar yen being where it is either. And the ink on that trade deal is hardly dry. So I think there'll be some opposition.
OK. Buy or sell the pound into the budget?
Oh, that's a difficult question to answer. I think I do not believe that this is going to bring any good news for the currency, to be honest. The political situation in the UK is incredibly difficult. The fiscal situation is incredibly difficult. I can't see Rachel Reeves delivering anything that's going to be good news for the pound, to be honest.
Nothing's going to be good news over no time horizon, Sonia. Can you find no time horizon over which this is a good news story for the pound?
Not at the moment, I would say. They will have to look what happens next year, obviously, but no, not really, to be honest.
Okay. Just very quick. If the Chancellor resigned, would that be taken as good news or bad news?
Ooh, do I want to go on record with answering that question? I think it would be bad news, to be honest, simply because the uncertainty that will create. And I mean, the UK has a recent history of politicians, coming and going. So that's probably never really good news, if we're being honest.
OK, fair point. Sonia, great to catch up. Have a great weekend. Thank you very much indeed. Sonia Martin, Head of FX and Monetary Policy Research at DZ Bank. What are we going to be talking about next? We're back to the main story. Nvidia takes center stage.
Sales are off the charts. Nvidia GPUs in the cloud is sold out, but we've got a bunch of Blackwells to sell.
Up next, we're going to take a look at how European tech stocks are going to react to the Nvidia numbers. That's next. This is Bloomberg.
we've done a good job planning for a very, very strong year, and we've done a good job planning for Vera Rubin. So sales are off the charts. Nvidia GPUs in the cloud is sold out, but we've got a bunch of Blackwells to sell.
Nvidia CEO Jensen Huang there speaking on that really blowout quarter that they had delivered, a surprisingly strong one. Revenue forecasts moving higher and pushing back on the idea, surprise, surprise, that the AI industry is in a bubble. Didn't ease the concerns, though. I mean, it seems to this morning. Bloomberg tech anchor Tom McKenzie is with us. Tom, he seems bullish on his own product, basically. But talk to us a little bit about, he's addressing the demand side. Is there enough supply? Is there enough... there's so much backlog. Is the timeline working to actually, deal with that demand?
So bullish, I think, is an understatement, but you're right to focus on the timeline, because I think that's really crucial. In fact, Bloomberg Intelligence Matt Bloxham was on our show earlier, and he was saying that towards the end of 2026 is when arguably the questions are going to be put to those hyperscalers. They'll really have to prove monetization around the spend on the capex. He sees that as a crucial period and a crucial test. Jensen Huang was saying that they are already, their suppliers and their customers, the likes of Anthropic, the likes of OpenAI, are already starting to see the benefits in terms of being able to monetize. In terms of the supply chain question, that was one of the first questions that Ed Ludlow asked him when he spoke to Jensen Huang, and he made it very clear they have sold out when it comes to the cloud part of the business. They still have GPUs to ship beyond that. So that is a question in terms of how they match the demand. There's no question the demand is there and is there through future quarters, is how they match that demand. And he emphasized just how well they are controlling this supply chain. And on future revenue growth as well, I think it was interesting that he talked about the fact, re-emphasized that Nvidia is not just a chip company, it's the full network now. He talked about the rack, so that's where you put in the GPUs, the networking, the cables, all of those low latency pieces of kit to have a package. They're pushing into that. And on the demand piece, of course, they have the sovereign play that's coming through, the sale into the hyperscalers and the sale into the likes of Anthropic and OpenAI as all the demand drivers into future quarters. And we can go through the superlatives later. There's a lot of them.
There are. And in some ways you could argue the positive is a negative. So this may not be the way that many people may look at this morning. But if you're worried about overbuild, didn't Jensen Huang just tell you that it's going to get even worse?
Well, he told you that they're going to be building at pace.
They're going to sell a lot of chips.
They're going to sell a lot of chips. The hyperscalers are spending around $300 billion this year, 400, possibly up to 500 billion next year. He was asked about the energy constraints. He kind of curved and kind of dodged that question from Ed, which is a really valid question in terms of the constraints this all puts on the grid. And so to your point, look, if they're building at pace, there's no slowdown in how much is being built globally on the infrastructure side. And so that comes back to the Matt Bloxham piece, which is if they cannot show significant revenues in terms of their customers...
The customers have to make money
off this. They have to make money off this. Then that's a problem. But, the OpenAI proposition is we are going to be creating agents that are going to help you, Guy Johnson, book your travel. We're going to be creating agents that help you with your healthcare concerns. You're going to be creating agents, and you are going to pay for that. And that's just on the individual customer level. Then there's the enterprise piece, and then there's the sovereign piece. So if you believe in that story, and if you believe in that future, then this is a bet worth making, and that is the case that Jensen Huang is making.
And on China, this was another big topic of conversation, wasn't it? The fact that they count on nothing in China, don't they? Their numbers assume nothing, and that's prudent. But there is possibly an upside if President Trump persuades the rest of the little makers. I mean, he's changed his tune really on the Gain AI Act, and now suggesting that maybe there is some credit to Huang's argument that the US has got to be in there.
So all the mood music seems to be suggesting that Jensen Huang is winning over President Trump on this very live debate. And we had the Bloomberg scoop this morning, to your point, on the White House wanting and putting pressure on Congress not to approve a bill that would make it more difficult to ship these chips into China. They are able to do the H20s into China, but China doesn't want them, and that's the China pushback on that. And they have their own domestic chips that almost compete with the H20. But the fact that Jensen Huang was saying this is zero, and he really emphasized this with Ed Ludlow in that interview, zero forecast around China, suggests, look, there's further upside. Like the China market, to your point, Anna, the China market opens. He's putting the value of the China market totality of about $55 billion US. If Nvidia can get a foothold back into the Chinese market, then that's another addition that is not yet baked into forecasts.
Yeah.
With margins projected at 75% for this company and $65 billion of revenues for the Q4 period.
So if there is any China, it's all upside. Tom, thank you very much. Bloomberg's Tom McKenzie, of course, with the latest on the tech sector and specifically Nvidia. Let's broaden the conversation again. Markets Live Executive Editor Mark Cudmore joins us now. Mark, good morning. Let's think about then what we've learned over the last 24 hours. Have you taken away anything material with regard to either specifically Nvidia or the big tech names that's reshaping your thinking at all, or are we still waiting for more confirmation there?
I don't think that has been a big game changer. That's in the context that we always kind of knew from the earnings previously this season that Nvidia earnings were going to be very strong. They are the big beneficiaries of the massive AI capex bubble that we're in. And we've talked a lot over the last few weeks that the temporary pullback in stocks is not the bursting of the AI bubble. We expect the AI bubble to inflate significantly further into 2026. We don't know the exact timeline of when it's going to burst, but it does not appear we're close to bursting yet. Now, the other dynamic we've talked about in the short term is the short-term pressure on retail favorites, momentum stocks, some of the frothier names, some of the AI adjacent stuff, driven by particularly what's happening in the crypto sector. We felt that wasn't fully exhausted yet. I'm not convinced that Nvidia earnings really changed that picture either. So I feel like we're still in the same narrative that AI bubble has much more to inflate into next year. Does it mean we start immediately reinflating from here? Have we already? Is this the time to buy the dip? I'm not completely convinced on that. I think that the other news we got yesterday, which was more narrative changing, were the Fed minutes. And I think now people are getting increasingly suspicious that we will get that December Fed cut. And maybe that's the more important marginal news we got. And therefore, there's still a bit more in this pullback to come in the next couple of weeks, particularly in the frothier names, maybe not the good quality AI names.
Yeah. If we don't get a Fed cut in December, is that a problem? Because you could argue the next Fed chair is going to cut rates aggressively and I can wait. Or is it a problem because the funding pressure is increasing and we could have an issue into year end?
I don't think it's a problem, first of all, because they won't cut unless, it's clear they need to. I'm not convinced that it's obvious they need to. At some point, obviously, when the US economy slows down hard, they're going to cut super aggressively. I don't think they need to be going for a preemptive cut now, and I don't think the US economy is careening off a cliff edge just yet. So therefore, I don't think they should be cutting. I don't think it's a problem. The funding is a concern, it is a worry, but the cut's not the marginal issue that decides that. So no, I don't think a lack of a cut's a big problem, even if it will weigh on asset prices in the short term.
Is that what is propelling some of these tech stocks higher? You have the Nvidia story on one hand, you have this kind of circularity, you have all these investments, all this fiscal spend. How much of that rally is dependent, though, on the Fed kind of greasing the wheels?
I think it's clearly a marginal positive driver. It would be foolish to dismiss it. I don't think it's the most important dynamic here. Yes, one of the things that fueling valuations is that we are always, under Trump administration, going to get Fed policy, which is too easy for the economic fundamentals based on orthodox economic policy. And that helps asset prices. But the AI bubble is its own theme, and it's more dominant. And we're at the inflation stage of incredible capex spending, which benefits some of the big names out there.
Bloomberg Markets Live Executive Editor Mark Cudmore there walking us through some of the big stories of the day. More up-to-date analysis from him and the team. ML Go is the function on your terminals. Go from the macro to the micro and get our stocks to watch with Chloe Melly. Chloe.
Good morning, Kriti. Let's keep an eye on AI-related companies in Europe today after Nvidia provided quite an upbeat earnings forecast. And the CEO also pushed back against this idea of an AI bubble, saying that this narrative does not really correspond with the reality seen by the company. So we'll see how that is reflected in some of the shares of companies in Europe that are exposed to this data center build-out and really big beneficiaries of that. So obviously companies like Schneider Electric, Legrand, Siemens Energies, obviously a lot of them have been having already a pretty good year. So let's keep an eye on that today as the easing of those concerns around lofty valuations and the AI bubble potentially provide that boost this morning. Moving on to BNP Paribas, after the French bank boosted its capital ratio target, which is a key measure of resilience, and also announced a new buyback. So if we compare it to some of its French peers, BNP has been having a bit more of a muted trajectory. Sogden has been doing particularly well. So we'll see how this raise target and this new buyback changes this picture this morning and potentially provide some of that much needed relief for BNP. And finally, let's move over to the gambling sector. And some UK gambling companies have said that they would have to close shops if Rachel Reeves decides to increase taxes on that industry at the budget next week. The Evoke CEO has said that he would have to make the odds worse for customers to counter the impact of those hikes, and also said that potentially thousands of jobs could be lost in the industry. So definitely an industry to be looking at for, and the sector to be watching as we get closer and closer to this budget.
Yeah, absolutely. One we'll keep in focus as we as you say, get closer to the budget. Our equities reporter, Chloe Melly, thank you very much. Kriti, you were right to focus on the AEX and futures there, because it seems that those Dutch futures are a little stronger than the rest of Europe. Perhaps the ASML Nvidia read across into ASML could be something to watch this morning.
Yeah, it's fascinating. When we should mention, we haven't hit this yet about an hour in, but earlier in the program, we did get headlines coming from the Chinese actually talking about that Nexperia story. That's been an overhang in the last couple of days as well, saying that the issue that the Dutch have said is resolved actually isn't, according to the Chinese. A lot going on when it comes to the Dutch market, a lot going on in the tech space. The opening trade is, of course, Next Futures in the green. This is Bloomberg.
Morning, welcome back. A couple of minutes to go until the start of the third day session here in Europe. Now, normally at this point I would show you yesterday's S&P session, but that would be the most irrelevant chart that I could show you, because actually all the action was, of course, after hours. All the action came with the Nvidia numbers. And as you can see, we get a decent bounce. These are Nasdaq Futures, just checking. Yep, Nasdaq Futures, nice little pop. We are up 2.28% on a two-day basis. As Val and I were discussing a little bit earlier on the week, we're actually fairly flat. But this is the chart that gives you the positive momentum, which takes you to Kriti's futures.
Yeah, bleeding in pretty aggressively here. I'll start with Eurostoxx 50 futures, broadly higher by 0.9%, off their highs from earlier in the session, but still green on the screen there. The FTSE 100 is the underperformer, still in the green by about, we'll call it 0.4%. But the real one I want to focus on, Anna, is what's going on in the Amsterdam index. And this isn't really a futures contract we pay a ton of attention to, but because it has ASML in it, you can see the read-through. It is your outperformer this morning.
Yeah, absolutely. So we're watching Nasdaq Futures, we're watching the AEX, we're watching anything tech-related here in Europe. So let's put that front and centre. Let's focus on tech stocks. That certainly is going to be an area of focus for us as we watch what happened with Nvidia yesterday. It moved higher after hours. That took some of the other chip names with it, and so there could be some read across into European stocks. BNP Paribas also in focus. The French lender announcing a new buyback, also planning to reach some of its capital targets a little bit earlier than had been expected, and seeking to reverse a recent slide in the stock price seems to be the aim there, as stated by the management. And Novartis in focus, the drug maker over in Switzerland, of course, boosting its sales target. Two key cancer drugs, Kisqali and Scemblix, in focus, and they're raising their peak sales target because of these two drugs, Guy.
Okay, here we go, Thursday session. I'm going to throw defence stocks in there as well. Keep an eye on defence stocks in Europe. But let's take a look at some numbers. Let's figure out what's happening here. We put the AEX in this board just to give you an idea of how that market is going to open. FTSE 100, I'm not sure, is a particularly good tell on the European story this morning. It's up by 0.2%. Take a look at what is happening with defence stocks. Take a look at what is happening in the pharma space. Take a look, of course, what's happening with the chip sector. But maybe a subsector of that, the cybersecurity space, could be interesting in the light of what we saw yesterday with Palo Alto. There's plenty in the mix. We haven't even talked about the Fed yet and what's happening there. Keep an eye on the yen, keep an eye on Japanese stocks. But European stocks at the get-go this morning are up quite nicely. CAC out of the gate reasonably early, up by 1.2%. The AEX is up by actually a similar amount, which is interesting. The IBEX is up by 0.8%. The FTSE, actually not a massive underperformer this morning, only up by 0.6%. But it is a market on the front foot. But how long does the Nvidia sugar rush last for, I think, is a key question this morning. Kriti, what is happening in sectors and single stocks?
I mean, no surprise. That tech read-through that you're already seeing on that index level is certainly bleeding through. Your biggest index contributor is ASML, but it's powering a rally across all sectors. I think this one's interesting because you can see that this is a pretty broad-based rally on our hands. Basic resources, banks, telecom, travel and leisure, sectors that wouldn't necessarily catch the Nvidia read-through are higher today. We should point out as well, though, that the market has been selling off throughout most of this week, especially here in Europe. You have seen a lot of the underperformance. So there is a broader bounce back to be had, perhaps a little bit of a sigh of relief when it comes to those Nvidia earnings, as given it was a big macro event. It's not the only stocks that are moving, though. You are seeing, I would say, a decent amount to the downside. Only 54 stocks on the downside. Broad rally, but kind of a mix of what we're seeing, Anna.
Yeah, very few to the downside, as you say, in the stock 600, and no sectors to the downside. So that does seem to be fairly conclusive, at least for the moment, where this sugar rush, as you put it, Guy, has delivered us. The technology sector then up by 1.7%. Financial services also doing not bad. Banks on the back of that as well. Autos and auto parts, though, lagging. And that was another sector that was sold off with that cyclical sell-off that we saw at the beginning of the week. And it's not bouncing this morning. That seems a little bit more beleaguered. Valeo within that sector seems to be the main laggard in the French market this morning.
Paribas up massively. BNP Paribas up by nearly 6%. I was trying to work out what it would do on the back of bringing forward the capital uplift that they've delivered today. The market's taking that very strongly. I wonder whether that would impact buybacks and things like that. But once you look into the details, that's not the case. So that stock's up really strongly. Not as much as ASML, but it's a decent gainer this morning. I'm just trying to see if defence stocks are coming back. Rolls-Royce is up a little bit this morning, 1.5. Rheinmetall is rising as well. Not completely kind of reversing some of the losses we saw yesterday. And I think here's a little cold water just in terms of what we're seeing in the session this morning. On the week, we are still down, even with today's decent bounce, on the stock 600 by 2.32%. So we're still down.
We love a 6-day chart, right, Guy?
That's Monday, Tuesday, Wednesday, Thursday is where we are right now.
On Monday, we'll get to a 6-day chart. There is a lot going on, though, to your point, and it feels like the tech story is dominating across the board. Yesterday, we had a conversation with the Nasdaq CEO, Adina Friedman, about this very conversation. I should say, I think earlier today, actually, I'm getting my time difference on. This is happening Bloomberg New Economy Forum in Singapore earlier about the pace of growth in AI investment. Take a listen to what she had to say.
There's going to be some uncertainty as to exactly the path of progress, the path of investment, and these types of signals that you get from the companies that are really leading this revolution are the ones that the investors need to be able to help them understand that it remains on track. The hyperscalers and other major tech companies, I think, are continuing to drive the support for the overall view that this is a great investment to make over the long term.
Adina Friedman there, the CEO of the Nasdaq, commenting not only on Nvidia's earnings, but of course what you're seeing in that broader AI story. With us right here in studio is Laura Cooper, head of macro credit and global investment strategist over at Naveen. Laura, there's a lot going on here in terms of the tech space, but I think the biggest concern, the biggest cold water that's being thrown on this is the circularity of some of these deals where investments are happening and lending is happening and the banks are involved, and Jensen Huang is making investments in some of his what you would have thought were rivals a couple of years ago. Are you worried about the circularity of this trade?
I don't think we're worried about the circularity at this juncture. I think, to Guy's point, the stock sugar rush can extend because we are seeing the tech exuberance really drive the market. I think maybe what we're watching for is cracks in that CapEx signal, but we are seeing genuine returns on investments from some of those upstream ecosystems like semiconductors, like cloud infrastructure. And we think this can persist into next year as we start to see more of the next wave of AI, that diffusion, go downstream to some of those sectors where the productivity gains are mispriced. Yet, to your point, yes, there is some concerns around the circularity, but I don't think that's necessarily a story through the end of the year because we are expected to see even more CapEx next year. But I think the concentration risk is probably one of the crucial factors that we're watching for.
But if we're putting the emphasis here on CapEx, as you suggest, especially going next year, shouldn't that be reflected in valuation? Should Nvidia's kind of trading multiples look similar? This is an exaggeration to the Chevrons, the Exxons. I ask every guest this question. I can understand that you're trading on a growth stock kind of multiple, but if it's ultimately based on physical, tangible assets, why is that not showing up?
Well, I think at this juncture, we are still seeing these companies being able to generate very strong earnings despite having these heavy CapEx spends. And if we look at other metrics like the price to earnings growth ratio, that does suggest that markets are pricing in for the next 2 to 3 years about 15% earnings growth for some of these large AI players in the space. And given what we've seen more recently, I think that is an achievable kind of target for them to aim for. So it maybe suggests that, yes, there are these pockets of frothiness in the market, but overall, I think this is, still the early innings of this AI adoption. It does suggest that we are going to see further momentum in some of these, even though we see bouts of volatility, which we think really the past few days has been a healthy correction to shake out some of those unprofitable areas that have kind of benefited from more speculative money.
So, Laura, good morning. So, you say it's early innings of AI adoption, which seems obvious? Is it still? Does that translate into early innings of the tech rally then, or so? Is there really that much still to go?
I think it's a very different story, because what we have seen is this momentum chasing stage of inflows has been quite remarkable, really broken away from that tech adoption trend line. And so, yes, I do think we were in for a near-term consolidation to really shake out some of those unhealthy pockets of the market. But I do think that as we go forward, these companies are able to show their earnings. I think the key risks that we're watching for, one, I mentioned the concentration risk, but also the execution risk. These are very capital-intensive businesses. They're very compute-heavy. Will investors continue to pay this premium for these tech stocks until we see the productivity gains from some of this CapEx? I think that's really the key question. Are we going to see more of the valuation fatigue as the risk on the horizon for next year?
Yeah, if we like looking for things to worry about, then we could worry about big tech. We could also worry about private credit. But you like private credit. You say it's been attractive for some time. You continue to see it as quite attractive. We have a very highly read story on the Bloomberg terminal this morning that's it's a BlackRock private credit CLO failing a key test as bad loans mount. Now, it's just one CLO, and perhaps that doesn't tell us anything about the market, but everyone's looking for signs that something is not right in this particular part of the market. Are you concerned about that, or do you just do you just look through this kind of news flow?
I think we're going to see increasing pockets of stress in the private credit market as we do start to see more of those late cycle dynamics come through. But it really does warrant just being able to discern quality in this market. What we've seen is just this insatiable investor demand for this space against a backdrop of very weak covenants. So we're going to see some of these kind of episodes emerge. When we look at the private credit space, I think we're really looking, it can tie into the AI theme in terms of financing a lot of the AI build out. So looking at infrastructure debt, looking at kind of financing the grid upgrades. I mean, just the electricity capacity for some of these data centers really suggests there is a significant opportunity in more of that physical layer of AI, not just kind of the digital layer around those kind of equity pure plays in the tech stocks.
Does the Fed need to cut aggressively for all of those things to come true?
I don't think that's necessarily the case. I mean, we have seen quite a significant paring back of Fed easing expectations.
When do you think the next Fed cut comes?
I would lean towards early next year. I think certainly the FOMC minutes yesterday rule out that December cut. We've seen, first of all, the hawkish rhetoric from Chair Powell at last meeting. We also are seeing increasing comments towards inflationary risks. And then we have this kind of air pocket of data now with the payrolls print for November not being released until after the December FOMC. So Powell has likened this to essentially driving in a fog. So they're not going to make another insurance cut. They've already done that in December. So I think market pricing is probably looking a bit more fair for December. But even till next year, we're leaning into maybe 2-3 cuts. Powell has said neutral could be anywhere from 3 all the way up to 4%. They're kind of near that already. So
is inflation going up or down?
I think in the near term, inflation risks are tilted to the upside.
Okay.
We're only seeing
about much?
Half. I mean, our forecast for the end of the year, which is very difficult in this time of data blackout, but we're looking at about 3.2% on that core gauge for this year. Some disinflationary pressures next year. But if we see the Fed cut more aggressively, if we see a shift in the composition of the Fed, perhaps that could be reflationary. So I think all in, the risks are tilted to the upside.
How many rate cuts do you think we need to get from the Fed to get to 4%?
Oh my gosh, Guy, leave her alone.
No, this is the kind of, this is the game right now, where the Fed goes. And Nvidia's great. You're Nvidia today. I'm going to be the Fed.
I know. I don't understand why we're
role-playing. Starring role.
You're Nvidia. What are you complaining about? What do you think?
Does that make me a hyperscaler?
I mean,
it's like you're in the middle, so you're the hyperscaler.
I mean, our neutral forecast for the Fed is anywhere from 325, 350, kind of in the range, in the middle of the range of what Powell said. But I think financial conditions are already quite easy. You know, we are seeing consumption being supported. AI is a predominant driver of the U.S. economy, about 0.3 this year, remaining elevated next year. So this is still a fairly resilient backdrop. We're watching for cracks in the labor market, but at this juncture, you know, seeing some signs of stabilization, albeit the blackout certainly doesn't help on the data dependency front.
So resiliency is the word you use there, Laura. I'm interested in some lines just dropping from UBS, from the CEO, Sergio Mortier, who's talking about the pipeline of capital markets activity. He says that the pipeline is building in capital markets. And I suppose that goes along with some of the things you've been talking about. You know, we're seeing a lot of investment in AI. That's changing the game in some sectors. We're seeing expectations of lower rates. We'll see what is actually delivered, but maybe that supports an M&A story as well. Are you seeing that as another reason to be sort of risk on?
Very much so. I mean, if we look at our forecast for the U.S. next year, we think the fiscal impulse is going to be a predominant driver of that. And that includes not just tax cuts, but the deregulation environment. And we think, yes, that will spur greater M&A activity. And if we look at the credit market, we think that's going to open up, you know, even greater opportunities. So if we look across the credit spectrum, anywhere from senior loans all the way to the private credit space and pockets of high yield, this is going to be an ample opportunity, we think, for income-generating investors seeking that income generation in their portfolios.
Okay, you're Nvidia.
Which I know you say is a good thing, but everyone's rooting for Nvidia to drop.
You're the hype scare. Laura's the market. Laura's the market. So we've got to listen to her. Always listen to the market. Laura Cooper, thank you very much indeed. Head of Macro Credit and Global Investment Strategy over at Nuveen. Okay. Let's take a look at what the Core 6 looks like this morning. This is the story. Very positive picture emerging for some of the tech stocks. You can see ASML is higher. Positive note out on the defence sector today. Was it from JP Morgan, I think? Or Morgan Stanley, I can't remember, one of the two, talking about the fact that maybe yesterday's move down was a little overdone. Rheinmetall bouncing back quite nicely this morning. But a pretty positive picture. Nestle to the right. That's the safe haven story, down by 0.2%. Let's find out what else is moving the market. Chloe Mellett's here with details.
Good morning, guys. So BNP Paribas is moving quite strongly this morning. We're up 5% for the French bank after it brought forward its capital ratio target, saying it will essentially be able to hit it ahead of time. And it also unveiled a new buyback. So this is a measure of resilience, of profitability for the bank. And that's making investors quite happy. BNP has been trying to reverse a recent slide in shares because of some recent legal troubles that have held back that stock. And it seems that this raised the target and this new buyback is making investors quite keen on BNP this morning. Moving on to some read across from Nvidia, and we are seeing quite positive movements across those AI-related companies in Europe after Nvidia provided an upbeat earnings forecast and the CEO pushed back against this narrative of an AI bubble. So we can see ASM and ASML, providers of semiconductor equipment, and then also Schneider Electric and Legrand, which are providers of data center equipment. We could only fit 4 on the board, but we are also seeing Infineon, B, Semi, all of those companies within that AI-related sector moving higher this morning on the back of this Nvidia forecast. Moving on to Vodafone, which is down this morning about 2% after the CEO said that she wants revenues from business customers to make up about half of the total in the medium term, compared to about 25% now. And as part of this broader strategy, wants to invest more in AI and cybersecurity. This is a strategy and an idea that maybe doesn't resonate with investors very much, and we are down on the back of this morning. And finally, Valeo, the provider of auto parts, of braking systems, for example, is down almost 6% this morning after saying that it operates in quite a demanding environment at the moment, and it provided some new medium-term targets that disappointed investors a little bit. This is obviously a sector that has been struggling because of the broader weakness across that car sector, and that seems to be reflected in those shares in Valeo this morning.
Chloe, thank you very much. Chloe Melly from our equities team with an update on some of those movers. Coming up on the programme then, we check in on European chip stocks and get more on Nvidia's punchy earnings beat. It certainly is having a read across into European assets this morning. More on the tech sector next. This is Bloomberg.
Welcome back to the opening trade. We are 80 minutes into the session, and the word of the day is Nvidia. I would argue it's the Fed, but we're going to stick with Nvidia for now. As you can see, what we are getting today is a fairly decent pop. European equities are still down a little bit on the week, so just a little bit of cold water on the word of the day. But nevertheless, I think you've got a fairly solid session underway. Chips are doing well. This is the story. Like you can see, ASML, it's having a great time. And as you can see, generally, chip stocks across the board are doing pretty well. Nvidia bounced after hours. I think you can see that in the numbers today. I think it was, what was it up? 5%? There you go, 5%. We'll bring you the early trade at the top of the next stand to give you an updated idea on what we are going to be seeing. Nvidia has delivered a decent set of numbers. The gross margin was epic. You can't really argue with those kinds of numbers, to be honest. The AI industry is in a bubble. Well, Jensen Huang doesn't think that it actually is. Remember, this is now by far the world's most valuable company, and it expects sales of around $65 billion in the January quarter. Just for context, that's roughly $3 billion more than analysts had predicted. Jensen Huang, as ever, wearing a tie. I'm just going to point that one out, but still, nevertheless, pretty optimistic.
Sales are off the charts for Blackwell, and Nvidia GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong.
So Kriti this morning is Nvidia. But if I buy a chip from Nvidia, from Kriti, am I going to make money making that chip? That's maybe the question that I think is the critical one that we need to answer. But let's get some more details on what is happening here. Matt Bloxham from Bloomberg Intelligence joining us. Let's just deal with Nvidia first of all. They will deal with the wider questions. That was a good set of numbers.
It was, but we've become accustomed to good sets of numbers from Nvidia. You know, that $65 billion you mentioned of sales for the Q4, about a 5% beat and 66% year-on-year growth. So this is a business that's doing incredibly well. And you say 75% gross margin, a hugely profitable business too. And that profit is kind of what helping to kind of fund, you know, everything else, you know, and there is that kind of circularity that's still out there as a question for the industry. But yeah, you know, the near-term outlook certainly for Nvidia is a healthy one. They talked about $600 billion of capex from their big customers going into the industry next year. So I think, you know, there's no signs that this is going to slow anytime soon. I'd say that the second half of next year is perhaps a bigger question mark about whether that super cycle can be sustained or not.
Let me ask you about China. They don't count on anything from China, do they? And Jensen Huang has been popping up at every sort of Team America White House event you can imagine recently to be praised by President Trump and to try and persuade President Trump, perhaps, to allow him to talk to the Chinese about selling more and more advanced chips in China. He seems to be making some progress.
Yeah, there's this GAIN AI kind of law that they're trying to push through, which would essentially require Nvidia to meet domestic demand first before supplying other markets, including China. We'll see where that comes, because there's obviously some other political lobbying going on in the US to continue to restrict them because of the concerns about military technology. I think, you know, that they're right to assume that China's a zero opportunity for them, and I think that's the way the wider market sees it too. So it would be kind of an incremental opportunity. Personally, I think, you know, the Huawei and the other domestic manufacturers are catching up on the technology, still behind, they're catching up. And the Chinese government has, you know, a China first policy, and it's encouraging, if not mandating, its local businesses to source locally, not from Nvidia. And that's easier to do as the technology catches up. So I think, you know, the outlook for China is a tougher competitive market going forward for Nvidia, even if policy restrictions from the US administration are relaxed.
Well, I think what's fascinating there as well is we saw this with the relationship between Donald Trump and Crown Prince Mohammed bin Salman as well. They moved Saudi Arabia to being kind of a new tier of ally to, in case you do see those restrictions happen, that the chips can still get to the Middle East. We're putting a lot of emphasis on just one company. Should we be looking at the Microsofts, the Amazons, the Oracles of the world to kind of detect where the problem child is?
Yeah, or maybe even the opportunity. But I think, yeah, they are potentially the problem child, you know, next year and beyond, because, you know, they are making to some degree, speculative investments. They're anticipating that this AI super cycle continues, and they're building capacity for the kind of midterm. And they're in an arms race with each other. Because one's doing it, the other has to do it. Otherwise, they're going to be out of the picture. So I think, but to continue to keep their shareholders comfortable with the outsized capital spending they're making, they need to continue to show evidence that this investment is helping their bottom line. Whether it's through extra sales growth, better margins, more market share. And that needs their customers to continue to spend. So that's enterprises. Are enterprises seeing enough return on investment across their businesses to justify that and to continue to spend? Will consumers spend $20 a month for AI products? And that's going to take time to kind of become clear.
All right. Matt Bloxham from our Bloomberg Intelligence team walking us through the Nvidia story, the political story, and, of course, the read-through into the broader sector. Speaking of the read-through into the broader sector, crypto has been kind of tied and intertwined with what we see in the tech space. So Bitcoin at the moment trading back above 90,000. We're looking at about a 92,000 handle right now, higher by just shy of 2% as it kind of gains a little bit more momentum with risk assets. It comes after it hit the lowest level in 7 months yesterday, extending the more than $1 trillion wipeout across the asset class story. So where does it get its cue from? Well, Anna Herrera, Bloomberg's senior editor for digital finance, joins us around the table. Anna, we were just having a conversation with Matt there about the tech story. Is crypto driving the tech conversation, or is the tech conversation driving crypto?
I think it's the tech conversation driving crypto, which is a bit ironic because for years we heard crypto would be sort of an asset class that would sit on itself, sort of something that was uncorrelated, digital gold, a hedge against inflation. And now actually we're seeing as it gets more institutionalized with ETFs, perhaps, we're seeing really that it's moving with other risk assets, right? When risk aversion gets high, we're starting to see sell-offs. And while, prices are up today, we've been in a sort of downward spiral that's wiped out most of the gains that crypto has had since over the year. So we're watching and seeing will it continue to be correlated with risk assets, or will it go on another trajectory?
There was this whole idea that institutional money would be this kind of stabilizer. What's going on?
No, it's clearly not stabilized as much. I guess it's stabilized in the sense that perhaps you can now say maybe when other tech stocks are down, you can think Bitcoin, but there's still. It still goes down 10% and very quickly, or even more, right? And you can lose gains that you've accumulated in a year in a week.
How do you think institutions feel about that?
So I think institutions, well, it depends on the type of institutions. The conversations you have obviously with firms like endowments, the really big ones, they say they still can't, justify going full in because, they can't explain when there's a sudden 10% loss in an hour or something to their, that's not the kind of risk they can take. But, they can step in the market with, market neutral strategies and things that are a bit less risky.
Anna, thank you very much. Thanks for the update. Bloomberg's Anna Herrera with the latest on that crypto story. Yeah, real weakness coming through in Bitcoin, but not today. Today it's up with the AI story, with the Nvidia story, with the tech story. Coming up, we check in on markets and questions around a tech bubble. We'll get some views from Carson, CEO and founder of Muddy Waters Capital. Stay with us for this conversation. What views does he have on the big tech landscape, the wider investing landscape? How is he thinking about 2026? 8:26 here in London. This is Bloomberg.
Welcome back to the opening trade. 30 minutes into today's session, green on the screen across the board. It is a tech story, but there's other pieces of it too. Let me walk you through it. Broadly, we are seeing a 1% gain on the stock 600. The underperformer is right here, the FTSE 100, but still higher by 0.7%. That's your broader risk on read-through. The CAC Iran is really benefiting from that tech trade as well, plus the BNP story is moving that market. The DAX, though, which is, of course, helping with some of the SAPs, the tech story, is also benefiting from defense, which is coming back from some of the sell-off that we saw yesterday. But, Guy, tech across the board.
OK, let's talk about kind of the internals and what we're getting and what we're seeing. I have mixed news in terms of what we are seeing. So let's start with the basic arithmetic. Stock 600, 480 up, 104 down. Nice ratio, so that looks pretty good. However, look at what is happening with volume. This doesn't feel like a convincing big volume kind of a day, which I think is interesting as well. Take a look at what we're seeing in terms of the gainers. I think they're fairly obvious. That tells you maybe we haven't learned that much over the last 24 hours. There are some interesting stories here. I'm not sure ASML is actually one of them. It is up. Nvidia had a great day. ASML is up. Shocker. The other story is Novo beginning to come back a little bit. The story of the morning, actually, to my mind, is in the banks. BNP Paribas out with numbers this morning, out telling the market that it's going to bring forward its CET1 target. That's great news. Returning money to shareholders. This is good news, and the market's responding really positively to this. Basically, it feels they can do this and give money back. And the fear in the European banks has been maybe that after a great period of giving money back, that would start to peter out a little bit. Maybe not. Anyway, let's move on to the laggards. Again, Nestlé, National Grid, Vinci. These are basically utilities. Maybe not Nestlé, but you could argue maybe Nestlé is a kind of utility of the food business. It is the biggest food business in the world. It is a staple. It is all of those kinds of things. When you go back into growth and you go back into tech, what do you sell? That. That probably is the narrative this morning. There's also a yield factor in all of this as well. But I don't think none of these things are hugely shocking this morning in terms of the way that the market is positioning. Anna, what else do we need to know?
Yeah, let's get an update on some of the other stories that we're covering this morning. Investors are zeroing in on today's release of the delayed US labour market report, which is expected to either kill or rekindle waning expectations for a Federal Reserve interest rate cut next month. The data will likely be the only official major jobs data published before Fed policymakers meet for the final time this year. That'll be the middle of December. The Japanese Prime Minister Sanae Takaichi is set to unveil $112 billion in fresh stimulus. Documents seen by Bloomberg show the economic package will be funded by an extra budget that's about 27% bigger than what was pledged in her predecessor's spending plan a year ago. Sources say, given the larger size, additional Japanese bond issuance will also be bigger than last year, and we've seen JGB markets responding, yields going higher. BNP Paribas has announced a new €1.15 billion share buyback and plans to reach a target for capital strength earlier than expected. As Guy was telling us, this as the French lender's CEO seeks to reverse a recent slide in the stock price. The bank also said it plans to lift its CET1 ratio by 13% by 2027, a year earlier than previously planned. Kriti.
Now, lots to watch in terms of what is actually moving this market. Green on screen across the board. Let's get a little bit more on that, especially as Nvidia earnings seem to be blowing this market away. You're seeing the ripple effects as we just walked through. Well, let's see how you go from here. Carson, founder and CEO of Muddy Waters Capital, joins the program here in London. Welcome to London.
Thank you.
Lovely to see you. We're seeing green on the screen today. I think there was a lot of jitters earlier this week about whether or not we would get to this point coming after those Nvidia earnings. There's a lot of people, Guy Johnson included, who are looking for the moment that the bubble pops. If you're one of those people, how easy is it to short the market right now?
Well, so I presented at Iverson yesterday, and I dropped a long, and so some people asked me, are you done with short selling? No, but I would much rather be long than be short in this market, I think is the terse answer there. Look, if you're out there trying to short Nvidia or any of these big tech names, you're not going to be in business very long. So when I look at AI, you have all these AI adjacent companies, you have these AI AI pretenders. That's where you would want to look to short. However, so long as the leaders such as Nvidia are still going up and to the right, I think that would be a very dangerous trade. So yeah, we have a list of names that we think are suspect, and when the time is right and some of the froth is out of the leaders in this space, that's when we're going to look at them. But until that point, we're staying out of those waters. You said until the froth comes out of some of the leaders in the space. What is the canary in the coal mine that suggests that froth will come out? Yeah, actually, I want to rephrase that a little bit, because I think the way this will kind of end is that you'll have an oversupply of speculative assets. Right? It'll eventually crush the demand for speculative assets. So we see these cycles periodically. We saw this at the end of 2020 going into the beginning of 2021. I mean, it was so bad, that's when you had these, almost valueless stocks that were ripping. And so what happened was Wall Street responded by producing a lot more financial product. And you had all these de-SPAC transactions, and that just collapsed the demand. So I think that's what's going to happen. So it likely won't be Nvidia that starts cratering, but it's going to be all the wannabe AI, wannabe tech names. There just will be too many of them, and it will overwhelm speculative demand. And then that can start to sink or,
cause a little bit of suction for the leaders in the space.
Good morning, Carson. I wonder, we've talked about AI and as in what it's doing to the overall market, but I wonder what it does to your business, to the identification of short candidates, for example. I know I've heard you talk earlier this year about how maybe it doesn't help identify them that much, but I wonder how much that conversation is evolving, because you mentioned, maybe there'll be companies that overstate the benefits that AI might bring to their business because it's very zeitgeisty, it's very trendy right now, and when the tide goes out, might be the time to start identifying those. I mean, is AI useful to you in trying to identify the companies that have overhyped AI?
Well, we are still not using it to identify, but what is helpful, definitely uploading a bunch of documents, and if this isn't super important, saying, okay, create a summary and then sending that around. So large language models are helpful for that. And I say large language models because I'm not a tech person, but some years ago, somebody explained to me how a large language model worked. And they said, this is not artificial intelligence. This is not actually thinking. And so I'm on a chat group in Austin with some people who are very big in the venture and tech space. And I asked them this question last week. I said, okay, when you look at all of these CapEx plans for, AI data centers, what portion of this is for large language models versus other forms of, quote, AI? And nobody can answer the question. And so I think that's actually what's very interesting, because my understanding is that large language models are unlikely to evolve to the point where they can actually be smarter or, nearly as smart as a human. Whereas there are other types of AI models that could be evolved to that point. So as far as large language models go, they're great for parsing large amounts of information and creating summaries, but they haven't helped us with pattern recognition up to this point.
Okay, so that's not where you get your ideas from. From what you said there, then, you do think that maybe we've overhyped. I mean, are we going to see businesses? There's talk of businesses using, agentic AI agents to help them do things more productively. This is the big productivity secret, big productivity gift waiting for us over the next 5 years or so. We've got aging populations globally. Is that to hope too much? It's not going to be that way.
Well, certainly there's some functions that these seem to perform reasonably well. They're not 100% accurate. And I do think that large language models, if we want to talk about high-value knowledge industries, I do think that they are coming for the legal industry in a big way. Just when you think of how much of law is reviewing documents and trying to distill them and synthesize those documents, large language models don't understand what they're reviewing. And to date, there are a number of lawyers who've gotten in trouble for relying on them, but they will probably, I assume they will get better at that, and they will stop hallucinating cases. So the legal services profession, they really do need to watch out.
I was talking to the CEO of a large bank in Europe the other day, talking about the mechanical process of passive money coming into the market and how the market's become terrible at valuing things. Can you is this marks out of 10 for this market valuing things, just because of that flow, that passive flow story?
Well, look, I absolutely believe that passive has broken the markets in terms of greatly diminishing price discovery. And there was a very interesting paper written 2 or 3 years ago by some academics. It's called the inelastic market hypothesis. So they say, look, this classical theory of finance that when stocks become too expensive, people make rational decisions and reallocate to bonds, that's broken. That doesn't hold. And so they estimate that with the U.S. market, that every net dollar that flows into the U.S. market, in aggregate, market cap increases by $5. And so that demand for stocks is inelastic to price. Like the higher they go, again, classical finance.
So the market is irrational.
So the market is, well, you could look at it and say it's irrational, but if you understand what passive is doing, and by shrinking the supply of stocks, by constricting that, because it doesn't matter how expensive Nvidia gets, right? All of these funds that are buying the S&P 500 index, they will not sell Nvidia until they have net outflows. So they will buy it every day at whatever the price is if they have inflows. So up to a point, passive has a role in the markets. but now passive is becoming the market when you look at a lot of the major indices. And that's why you also see all this dispersion in the indices, right? So if you look at it in a given year, roughly 2/3 of the companies in an index are underperforming the aggregate performance of the index, which is being driven by a small number of companies. And that concentration is just one of the offshoots of the passive phenomenon.
Let's go from kind of macro to the very micro. You talked yesterday about Snowline.
Yes.
Do you like Snowline because it's a gold company, or do you like Snowline because it's going to get bought?
Well, okay, so it can be both, right?
Okay.
Both things can be true.
Try and get a choice.
So, look, the reason that we got interested in mining a few years ago, our macro thesis has nothing to do with the price of metals. It's that for a couple of decades, there's been an underallocation of human talent to the mining sector. That's on the operating side as well as the investment side. So we feel that especially in junior mining, there's real edge because there are not a lot of investors out there who actually understand the dynamics there and know how to look at these companies. So when we look at Snowline, as we call it, is a true tier 1 freak deposit. Majors, regardless of the metals, they have to acquire because they've stopped doing greenfield exploration. Their exploration budgets are focused on their existing deposits, trying to find adjacent deposits. So majors are devouring themselves because they're producing and removing any terminal value that they would otherwise have. So they have to acquire companies like Snowline. In the gold mining industry, Snowline is the only deposit that we're aware of that can move the needle for a mid or major miner at this point. So yes, we think it gets bought, and the dynamics in gold are such because, again, the majors are depleting their reserves that they have to acquire companies like Snowline.
Carson, I know we just went really micro. I'm going to macro it out again as a final question to you. You said a couple of things in Guy's passive investment question. You kind of indicated there is kind of a buyer of last resort to some extent, which brings me nicely to the Federal Reserve. You mentioned the SPAC collapse in a couple years ago. It felt like what popped that speculative bubble was higher rates coming down the pike very, very quickly. If we start to see that again from the Federal Reserve, is that what pops the bubble? Or to what extent is this rally being driven by the Fed greasing the wheels?
Well, so, I mean, my take, the rates went up in the second half of 22. And I think, GameStop was really the peak, the end of January of 21. It was really the peak of the highly speculative stocks. So it was kind of funny because in 22, when I would do the rounds, people would say, oh, this must be a great year for you because the S&P was off, because that responded to rates. In the bread and butter world of most short sellers, where we're in small and in mid-cap stocks, 21 was a great year. 22 was kind of meh as a result because so much of the air had come out of it. So I think that when we're looking at things that are interesting for us to short, not beta hedges, but alpha shorts, I think that's just going to be caused by the imbalance between, supply of speculative names and demand for them. But, what happens with rates, that's going to have much more of an impact on your large cap. So for the few short sellers that are still out there basically trying to do alpha shorts in that space, which I don't know why you would, that'll matter more to them than it does to the few of us who are still doing shorts elsewhere.
All right, Carson Block, CEO, founder of Muddy Waters Capital. We'll leave it there, basically wishing a little bit of a blessing to the folks who are willing to take on the Nvidia rally. We thank you so much. Let's talk about what's coming up in the day ahead, because, of course, the Fed does feature pretty strongly in that. The EU-South Africa Leaders Summit, we've got Walmart earnings, and, of course, we have plenty of Fed speak as well. But a lot of that might be reacting to jobs data coming down the pike, or maybe the lack thereof. Valerie Teitel joins us around the table. Val, what do we expect?
Hey, finally the backlog begins to get released from the Bureau of Labor Statistics. We get that delayed September non-farm payroll report. Both the unemployment rate and the household survey will be released today. So congratulations on that, I guess we should say. However, the one big thing about this is it is highly delayed, and we've already seen Fed members really digging in their heels against this December cut. So So essentially, the market would need a really big miss when it comes to the non-farm payroll report out today in order to start tempting perhaps that December cut back on the table. So in the absence of that, perhaps the market might be looking more at the weekly jobless claims figures that are released today. This is the most timely piece of data we are going to get from the survey of last week. So perhaps maybe the weekly jobless claims could take the shine off of this highly delayed NFP, but there are still many questions over the delayed report when it comes to the October CPI and the timing of the November CPI. So a lot of questions still for the Bureau of Labor Statistics.
Valerie, great stuff. Thank you very much indeed. Busy days still to come. We're setting you up for it, trying to get everything in line. Which data should you be focusing on? Up next, we're going to be talking about Ukraine. There's another peace plan being pushed forward. Defence stocks are up today. They got absolutely whacked yesterday. Rheinmetall is down on a two-day basis by 3.85%. It's up this morning. What is happening with this story? Pay attention. It has a market impact, and we're going to watch it next. This is Bloomberg. Thursday the 20th, good morning. 50 minutes into the session. European equities are at session highs. We've gapped higher into today's session, but yesterday was not a particularly good session for European equities. Nvidia seems to have changed the story, but there are other factors as well. Take a look at European defence stocks this morning. They are bouncing back really quite sharply. As you can see, some decent performances being put in across the board within that space. I want to show you Rheinmetall, though, over a two-day basis, just to give you an idea of how bad yesterday was for this sector. And as you can see, on the two-day basis, we are still down and down reasonably hard. Now, this feeds into our next story, which is what is happening on the geopolitical front. A U.S. military delegation meeting with the Ukrainian officials. This is part of a fresh bid by President Donald Trump to rejuvenate peace talks with Russia. The talks on Ukraine are taking place after another U.S.-Russian proposal modelled on the Gaza ceasefire deal. Got a tepid reception, though, from Ukraine's supporters. The president expressing his displeasure with the conflict, though, and how he feels about Russia's Vladimir Putin.
I've settled 8 wars. I have 1 to go. You know what that one is. I thought that was going to be my easy one because I have a good relationship with President Putin, but I'm a little disappointed in President Putin right now. He knows that. I thought that was going to be the easy one.
Turned out not to be. Our chief Europe correspondent, let me get that straight, Oliver Crook, joins us now. Ollie, what do we know about the latest proposals? How are they different? What do we know about the details?
So we understand it's cast in the same sort of mold as the Gaza proposal, which was at least effective in bringing the Israeli and Hamas conflict to at least to the beginning of the end in that ceasefire. This, unlike that plan, which was a 20-point plan, is a 28-point plan. This was originally reported by Axios yesterday, and there are 4 main buckets that this will focus on. One is bringing peace to Ukraine. The second is going to be the sort of broader security guarantees for Ukraine, the broader security architecture within Europe, and then the future relationship between the United States, Russia, and Ukraine. Now, we should say this is very early days for this. This has not been run past any of the sort of European diplomats from what we understand. We don't know how much of this has been shown to Ukraine, but from the reporting that we've put together, that the Wall Street Journal's put together and Reuters have put together, the content of such a plan would require the Ukrainians to relinquish all of the Donbass, which not all of which the Russians currently have possession of. The Ukrainians would have to give up territory they currently possess. There will be some articles about basically their refusal, preventing on them to join NATO, also potentially diminishing the Ukrainian military, and also potentially barring the sort of international force that would be in Ukraine after a ceasefire in order to prevent another invasion by the Russians. What are the Russians willing to give? This is the big question. As far as what we've seen from the reports so far, they're basically just promising not to invade Ukraine any further or any other European country. This, of course, will not be sufficient for the Ukrainians or the Europeans because, of course, the Russians had already made that promise back in 1994 during the Budapest Memorandum, which the Russians were a party to, the United States is a party to, and the Ukrainians were a party to, basically giving up Ukrainians' nuclear capacities in order to guarantee sovereignty. So now we should say that this is a very sort of early proposal. That being said, on paper, from what we've seen so far, amounts to a large concession to the Russians.
Ollie, thanks very much. Bloomberg's Chief Europe Correspondent Oliver Crook continuing to guide our thinking about what's happening with the Ukraine story. Has been moving markets to some degree over the last 24 hours. We'll continue to watch those developments. Now, it's day 2 of Bloomberg's new economy forum over in Singapore, where global leaders are tackling critical issues from shifting geopolitics to the future of the markets. We're joined now by Bloomberg's Francine Lacroix, who has, of course, been leading and steering a lot of these conversations. Fran, talk us through the highlights. We spent a lot of this morning talking about the read across from Nvidia's numbers, the focus on big tech. No doubt some of that cuts through where you are.
Yeah, hi, Anna. It's very clear that actually the discussions here continue on AI and trade. So we started the day with Gina Raimondo, the former U.S. Treasury Secretary of Commerce, and she was very clear. But she had a message for the audience, which was, look, America first does not mean America alone. But then we had a slew of chief executives coming on stage. We had the ABB chief executive. We also had FedEx, and they were both saying, look, if you look at our supply chains, they've really shifted quite significantly over the last 9 months. The FedEx CEO pointing to rising trade flows from China to Asia. And there's this idea about the T3, the emergence of a lot of Asian economies that would rather do trade amongst themselves instead of having to choose between China and the U.S. So U.S., China, and India will be the T3. These also 3 large leading technology powers in the future. That's according to the Indian Minister for Transport. It was a good conversation. He talked to Editor-in-Chief John Micklethwaite. And on the global front, we also had a couple of discussions about climate change, which we don't hear about as much anymore compared to, let's say, a year ago. On the global front, we had the chair of the DNB Bank saying, look, ESG is facing a reset. So they're not expecting a walk back, but certainly a change in language with a lot more focus, for example, less on ESG and more on ocean on planet, which more investors can get behind.
All right, Francine Lacroix over at the Bloomberg New Economy Forum. We thank you so much joining us out of Singapore. You can catch more interviews from Francine and the team, of course, Singapore. In the next hour, she'll be joined by Patrick Maloney, CEO of CIV, and David Haas, CEO of Sakana AI. And as she said, of course, the AI theme running strongly in Singapore, something that we're very familiar with here as well, and has been in the conversation of the morning. I think the takeaway for me has been that we started off this morning saying, well, there's the Nvidia story and then there's the Federal Reserve story. And even though the markets are kind of viewing that as maybe 2 separate things, I think they're going to converge soon.
Right, maybe. And then also in a European context, add the defence story, because actually now technology, not the best performing sector this morning. It's industrial goods and services, which includes the defence names, bouncing back from the market reading too much into some of those other media reports yesterday around the prospects for peace in Ukraine, it would seem, at least in the first instant.
Looking forward, we've got a lot of data coming out a little bit later on. We're going to head paying attention to that out of DC.
Some data, the only data.
Well, the only data, but the claims data is going to be, I think,
yeah,
it's going to be pretty interesting. Fed commentary. I just wonder whether Japan's going to be the story, though, back into the day, into tomorrow's session. Dollar yen continues to be pushed higher. What happens next on that trade, I think, is going to be absolutely fascinating. But as we've already indicated, there is a great show coming up next. The Pulse has got some fantastic guests. Francine's going to be walking you through the next hour. That's what markets look like this morning. We'll see you again Friday tomorrow. This is Bloomberg.